Okay, good morning everyone. It is Wednesday, May 19th, 2021. We're looking at the S&P 500 futures market and we're going to get started here with our pre-market analysis. I want to jump to the ultra high time frames just like we do every morning just to see if the picture has changed at all, especially with this sell-off. And so far everything still looks very strong from a quarterly perspective. No signs of reversal, no indications of exhaustion in this move. So looking strong there. Same exact story here on our monthly. Now something I do want to point out, and some of you are wondering what the hell are with these lines. And these are back from maybe a month ago when I wanted to point out kind of the overall slope in price action here. And you can see that ever since the sell-off, from COVID last year, we've had probably one of the strongest bull runs here in history. And this data only goes back about 11, maybe 12 years here. And you can see how the slope has never been as steep as it is right now. And on this monthly chart, you can see we've pulled back, but we have not really come back to fully test that line. We still have a few points just below the low there, around 40.29. So we're still holding in this current trend, which is just interesting how strong this bull market has been for the last year. So no signs of exhaustion there. Obviously, we do have this bearish looking candle, but we also have about 12 days left for this to close, so we don't want to read too much into it. Still a lot of time for things to develop there. Our weekly, remember, I'm going to say this every morning here. When this closed on May 7th, we got our first bearish indication. And just so happens that when we opened the next week, we had that 250-point sell-off. Not only that, we got another bearish indication here on the candle that closed last week. So when this candle closed, we did push to make a higher high compared to the previous candle, arguably not by much. It was maybe a point or two, but still, from this perspective, we pushed to make a higher high, but then we got a lower high on RVI. So now we have two candles on our weekly chart giving us bearish indications. So now this week, this continued sell-off is, from this perspective, expected to be, this is all expected. And when we went to our daily charts, remember, we had the indication on the bar that closed on that Friday, that May 7th, and then on the 10th, on Monday, it might have happened in Globex, but in Globex and into Monday, we had this slight push up, and then that started the sell-off. So all of this was in the cards. Remember, when our higher time frames, when our weekly and our daily start giving us bearish indications, the type of sell-offs that we get are not 10, 20, 30-point sell-offs. They are 100, 200, 300-point sell-offs. And we've reviewed some of this stuff in the past. But pretty much on May 10th, we had a good indication of a big pullback, and we got it. And now look at what happened here just in the last few days. We had this kind of basically a double top, I'm going to argue, although arguably this was up by 2 ticks. But we had a double top here and a pretty strong push up in RVI. So we had this, what I call kind of an exotic divergence setting up here on the close of the 17th. Now, when we came into yesterday, remember what we said here. The RVI was still pointing up, and I said because we pushed to make a new high, we technically wouldn't really have any divergence here. However, when yesterday's candle closed, we actually pushed lower. So this is no longer valid, and what we had was a push up giving us an exotic divergence here, so a bearish indication off of that candle. And then when yesterday's candle closed, we had, again, a push higher just by a few ticks, but RVI came down lower. And so we definitely had another bearish indication from that candle. And so we have these two bearish indications. The sell-off was mostly yesterday, but coming into Globex and into the pre-market here, this sell-off is still, again, somewhat expected from the indications we're seeing here on our high time frames. Now, currently on this candle, we can't say too much because we have all day for this to develop. This RVI line could change. For all we know, we could have some huge buy, a huge bull run, a stop, what do they call it, a stop run, come shooting up, and this whole picture could change. Or vice versa, we could get some crazy sell-off. So currently, there really is nothing to be said in this area, at least from that perspective. Now, if we look at it from a retracement perspective, what I do like is that the lows we made back at the beginning of March, so March 4th or 5th, remember on March 1st, we had a really strong bullish indication for a larger push higher. And what happened was we started to get the push. They pulled back just a little deeper, and then we got the expected push. And then here on March 25th, when we pulled back, we in the trade room here that morning, we said we had pretty much a clear indication on every time frame for a continued big push up, and we got this push from 38.44 all the way to 4200. Now when we pushed up here, we were looking for 4180 as our first area of resistance, came right into that area. Then we were looking for 4200 even, came right to like 4209ish, and then 4250 was really the next level we were looking for some strong resistance. Now they pushed to 39.75, and so, or 38.25, and so did not quite get there, and that's when we got those bearish indications. But from this, I digress. From this retracement perspective, from the March lows all the way to the all-time high, the 50% retracement brings us right back into the previous resistance in the market here, and that high was 39.7850. So, we very well could end up selling off here, breaking the low at 29.25 and coming down to test the previous highs. And this was back on the middle of March. So it's not out of the question. We would not be out of bullish territory on the pullback if we got down here. Still could bounce and be very strong. In fact, if you look at some of these sell-offs here, we had 39.50 all the way to 37.10. So you're looking at over 250 point sell-off here. So we very well could continue all the way down to this 39.70 area, and it would be almost a very similar type of retracement. But I do like the confluence here off of that previous high, right around 39.70 to 39.80 here. And so we want to keep that in mind if we can't stay above this 40.29 area. When we come to our 4-hour, remember yesterday we had the bearish indication, and we saw this bearish indication on a lot of these time frames, but then we started to get a bullish indication off of the pullback, and that's why we had our bull bias as long as we could break above 41.63. But as we all saw yesterday, we could not get above 63 and sold off. That was pretty much the high. If we would have just sold that 63, anticipating some resistance there, that's really all we had to do, and that was right out of the open. But we did have bearish indications here now. The 4-hour, the daily, the weekly, everything was looking bearish from up here, and now we're getting even more of a sell-off. Now, at the current moment, again, there's really nothing to be said here. I don't have any indications of divergence. There's no signs of exhaustion in this push down. So we could, again, at least from a 4-hour perspective here, and even the daily perspective, there are no signs of exhaustion. So we could continue to push down here. These time frames are not telling us that we're done with the sell-off just yet. A 60-minute, again, we had the bearish indication off the highs yesterday in the pre-market. And currently right now, we do have a little bit of a sign from this hourly perspective that we could get a bounce in this area. So if you look off of the previous swing lows back here and come down to where we are currently, we most definitely have a pretty clear divergence here. Now that, again, can change. We do have this candle that closed here, and that low is at 66. So we want to keep this 66 in mind here. But everything is so bearish here that, I'm not going to put a lot of faith in that level. I'm going to want to jump down to my shorter time frames and see if we have any agreement down here. And even if we do start to get some agreement down here, we can only expect a push maybe to come up and test that previous area where we bounced here right around 40.84. And you can see we have a swing low at 81 here, and then the swing low over here around 84. So this general area could end up becoming a problem this morning in the push. And we'll also want to consider kind of the retracement of the whole push down when we start to look for levels of potential resistance. So currently somewhat of a bullish indication here off of the low. And remember, this can change very quickly. This new bar has 45 minutes to develop. And for, all we know, this could continue selling off. So let's see what our intermediate time frames are saying here. Jump to our 30-minute now. And yesterday we went ahead and we got rid, when we go on the high time frames, these lines start to get a little busy. When you jump to the 1 minute and you're zoomed in here, everything is spaced out. But on the 30-minute, it gets a little busy here. But currently we have the same indication. But I want you to keep in mind that when we're in a strong sell-off or a strong kind of bullish market, we don't necessarily want to put a lot of faith in counter indications, because those counter indications are only giving us signs of exhaustion in the move. If we did have every single time frame agreeing from the daily all the way down, then yes, we would want to heed that advice from those charts. But right now, we don't have the daily, even the 4-hour, giving us any bullish indications. So these indications that we're seeing here are very well just indications of bounces. And you can see these bounces occurring a lot here, right? We have the bullish indication here, and it bounces for whatever, 10, 15 points. And then we see it kind of continue to build up. Another push down, another push up, or at least flat on RVI. And now we have it down here. And so, again, from 66, we do have a bullish indication. But remember, it's probably going to be just for a bounce, because our higher time frames are not confirming the same signal. And so right now, all I can say is obviously we're in an extremely strong sell-off, but we are getting a bullish indication from 66 on these two time frames, so the 60-minute and the 30-minute. Outside of that, again, not much to be said. The retracement for this whole push up is already kind of out of the picture. No longer really care about that. And really, if we continue to sell off, if we look at previous price action here, we do have this swing high down here at 51. Let me get the number, 51 even. And I think I might have even marked it on my chart over here. Yeah, so 40.51, that's that swing high. So we know how well the market reacts off of some of these swing highs and swing lows. And we do want to keep in mind that if we start continuing to sell off, that we could potentially find some interesting interaction here in the market. Not only was it the resistance in the market here on May 13th, but at the close of May 12th, it's where we bounced. So we had a nice support, a nice resistance. We have not come back to that area, and now we're on our way back down. So that's why we have these levels marked, because they are such important levels in the market. So from a 30-minute perspective and a 60-minute perspective, we have this bullish indication off 66 at the moment. And outside of that, there are no other indications other than the obvious, which is we're in this really strong sell-off right now. We get to the 10-minute here, and 10-minute is also agreeing. But again, just like the other two time frames we're looking at, we keep getting these indications off the lows, right? We got an indication here, a little bit of a bounce. Now we have this indication down here. So we're probably going to get just a little bit of a bounce. And we have to keep in mind the resistance levels that we have above, because there's going to be a potential continuation in this move down. And I'm saying that because my high time frames are not showing me any signs of exhaustion in this push down. If the higher time frames did show it, then I would be looking for a potential complete reversal in the market, but they're just not showing it. So that's kind of where we are in our high time frame and intermediate time frames. We have that 66 down here, which again, this level was on the chart for a very long time. This 65.50 I went in and put in this morning. You can see all the levels that have been on the on the chart for a long time. They're smaller because I've recently updated the font size so that you guys can read this clearer. And this morning I put this 65.50 in based on some previous price action. I really should have just left 66 in because even though it was derived from a much earlier time in the market, it ended up becoming even more relevant. But you know, that's just how it is. You're never gonna know. But right now on these short time frames, I might as well bring up the 3-minute really quickly, and we'll take a look and just see if it agreed down here. Now, interestingly, we did not have a nice 3-minute reversal signal here. We just see it on the 10, the 30, and the 60, which really is, again, a great confirmation of the fact that we're not done with the sell-off. Now, I could be completely wrong. This could be at 66 and we just start going to retrace all the movement. But from the indications that I'm getting on my charts, my higher time frames and now even my short time frames are not quite agreeing with the intermediate time frames. And just to reiterate what I say almost every morning, the reason we're doing this analysis is looking for the stars to align. When the stars align, just kind of like what we got with the bearish signals off 79.50 the other day, that's when we start to get clear indications of what could potentially be happening. Right now, we don't have that clear indication. We just have a few time frames agreeing for a potential bounce. So we'll keep it there, and we're gonna want to watch a lot of these levels as we push back up. Now there is this untested swing low back here at 40.82 quarter that is I think going to be really important on this push up. It's because we really haven't tested it. We broke through. We never really came up cleanly to test that level, and it's really ripe over there. We also want to keep in mind that we have this full-on retracement of the whole push down. And our 38 retracement would bring us right back into the previous daily low, which is this green line. So we have our previous daily low in green, our previous daily high in red, and then our 50% of the two right there in magenta. And these levels are always important. They also help with context. So, you know, if we're staying below the previous daily low, it's a bearish indication. If we can break above it and ideally get above the 50%, we now have more kind of conviction for a bullish push and the potential to go ahead and break the previous daily high. So that's kind of the idea with those levels. And so I'm going to jump down now to our super low time frames and kind of see what's going on, see if we can get a trade right out of the open based on our short time frame signals. So this morning things are looking very bearish, and we do have 40.84 up here that we're going to want to break above if there's going to be some type of bullish morning here. If we can't get above 84 and even this 75.50, then, you know, that could be it. We could continue down. And then, like I said, we have levels below us that are interesting. So, you know, obviously the prediction points are extremely reactive, and we could see something down there. Something else that I do want to point out here, let me go ahead and erase everything except for the prediction points and just point out what we're seeing right now in this immediate area. So go ahead and make those invisible. We're in this area where there's a lot of prediction points close together. So this could indicate we have a choppy morning, right? So it just chops around for a while. And if you zoom out and you look at previous price action all the way back when we were down in this area, you can see that, well, we chopped around in here earlier, but if we go all the way back to this range right around 53 to 75, that's where we had, and give me a second to maneuver here, this 53 to 75 right here, where we pushed. We had a really strong bullish push. We came up to 75-ish, and then we just kind of went sideways for a number of days. and then we continue with our bull push. And so that's exactly where we are in the market right now, 53 to 75, right? So we have a lot of potential for a chop in this area, and that's kind of where we are for the morning. So hopefully that gives us a somewhat clear picture as to what we can expect. We do have some levels above us that we're going to want to watch, including 75.50 and that 84 level. And if we can get above those, that might be a good indication of a potential follow through in those bullish indications we have on the 3 intermediate time frames. So again, not quite the clearest picture this morning outside of the obvious bearish push here. So again, the reason we're doing this analysis is looking for the stars to align for the larger turns in the market. And we don't quite have a complete alignment in the stars this morning. Go ahead and bring the lines back up. And we're just about a minute until the open here. So, what did I do here? So just about a minute here until the open. And, you know, I pretty much expect that we're going to come down and break 66. And that's when we're going to want to see if we can hold 60 or 63, 62.50 and stay in the chop zone. If we cannot stay in the chop zone, again, 51 was the level I was talking about earlier. And then if we continue selling off, there's a lot of other interesting levels. In fact, let me just point out very quickly here from a higher time frame perspective, if we continue to sell off and we look at some of these larger pullbacks, that 39.72 area, like I said before, happens to line up with basically the 61.8 retracement from that March 25th low where we got all the bullish indications right off the 50% retracement of this leg back here, and we got the launch up to the new all-time high. So if you measure that leg, the 61.8 retracement brings us right into this area, right where I was saying we could potentially sell off to. We also have a CP right in that area. So let's get ready for the open here. Just about 20 seconds. And thank you, newbie. We have a bearish indication on the 1 minute right now. Pretty clear hidden divergence, meaning we're going to continue in the downtrend. It also is a 3 minute indication as well. So we're going to want to watch that coming into the open here. So this sell-off is probably not too surprising, right?